Good morning. It is Monday, June 3rd, 2024, the first day of the third quarter. And just a lovely day all around. I am Mark Sebastian, your only option. I am joined by one Andrew T. Giovinazzi, the Viking of the VIX, the Viking of the Volatility, the Vicar of the VIX. And of course, Alicia J. Leslie, the Queen of the Candles, the Princess of Ping Pong Tables. And we're here for the Ticker Highlight Show. Today on the Ticker Highlight Show, we're going to talk about the stock that we're looking at. We're going to walk through the chart. We're going to walk through the option setup, develop a trade, and then Andrew will update us on any open positions that we're still looking at. We've had a couple of nice ones the last few weeks. Some Walmart calls that just crushed it. Done pretty well kind of across the board. So been a nice little run. So with that, let's dig in. All right. Well, I'm going to start things off by today's ticker of the week is Chevron Texaco, not Chevron Texaco anymore. They used to be called Chevron Texaco. It's where the X in CVX comes from. But now it is just back to Chevron Corporation. You know, we continue to see from fundamental side, they just make a lot of money, but they're always carrying debt, which is worrisome when you've got interest rates not cheap anymore. And that is something that you want to have kind of in the back of your head. You know, what if borrowing costs really do go up and things like that, and it becomes kind of a problem. From a oil fundamental, you know, I don't know how much more of the SPR they can deliver, but oil itself is completely busting out to the downside. You know, we've just broken out of every major kind of stuff. And if oil is going to drop, it is going to be very difficult. I mean, an oil drop eats directly into the margins at Chevron and Exxon and names like that. Under the radar, there is some other business areas that Chevron's getting more and more into, and it's starting to have a bigger presence in natural gas. 1 second here. I should probably share my screen. It's starting to have a bigger piece of natural gas, but yeah, back to USO. Look at it. It's busting out. I'm sure, Alicia, you're gonna be talking a little bit about these charts, but you know, oil dropping is going to negatively affect Chevron's revenues. Now, it's managed to hold up better than oil. The weird part about them, when you compare CVX, mute your CVX and oil, is CVX has been a lot more. Mute yourself, Andrew, if you're
Oh, sorry, I'm just
understood. CVX and oil do track each other pretty well, but you know, when we had that nice pop in April, CVX kind of underperformed, and then on this selling, CVX is outperforming a little bit. So you can see that it is, you know, over the last 6 months, over the last year, 2 years, it's been just kind of a more stable play on oil than being in the physical itself. Over the last 2 years, though, you'd be up because of dividends, but the stock itself down about 10%. That now, if I go out to a 5-year, you can see it's up 36%. Really, they had just a phenomenal run from kind of 2021 up through 2022, and then it's kind of stalled out. I mean, this company was at one point the second largest company in the world. It's still worth about $300 billion. Relative to a lot of other areas, pretty low price to earnings ratio. Again, they have a lot of debt, so it's interesting. Their earnings before interest, taxes, and dividends and debt is more than double its actual net income, which generally is indicative of a heavy debt burden, or dealing with a lot of debt. They also get taxed out the yin yang, but I think it's more debt, and the fact that interest rates going up is going to have a little bit of a negative effect on their net income versus EBITDA. And that is what I have for you in terms of what I'm seeing in CVX. Next, we will unshare and have Leisha dig into what she sees in the charts.
Thanks, Mark. So when I first written up Chevron, it was all looking so bullish. Well, here's USO. USO looks like it has some room to go lower, 69.88. But last week when we talked about it originally.
Is this from the SPR, you think, releasing the oil? 1 million? What are they releasing? 1 million barrels?
I don't know, because OPEC is tightening up. It's just I don't know.
Yeah, I read OPEC was keeping it with the cuts through 25.
Yeah,
right?
maybe they were
That was
worried
a
there would
headline.
be maybe they were worried there'd be even greater cuts.
Yeah, like
And
1 million barrels is only
that's
Not
like
a lot.
18% of our daily usage or something.
Oh, do you? Yeah.
I wouldn't think it would be a lot. Anyway, crude's got some support just below here, 73.63. CVX itself was really, look at how nicely it held that bottom of that pitchfork. That had proven itself many times as support and resistance. Nice bounce, double bottom, and very bullishness until it came up against some resistance here and big reversal today. So this will be support again, 156.85. Watch that level, and this will be resistance, 162.5. In between there, it's anyone's guess. Today is an ugly reversal, though. So maybe a strangle. Andrew?
Right. I like the way. I don't hate that idea. Andrew, why now, Leisha, if you want to unshare.
Oh, yeah, I'm sorry.
How dare you not fail to unshare?
Leisha, you're kind of
normally we yell at
lukewarm
people for not sharing, and now I'm yelling at you for sharing.
What'd you say, Andrew?
Were you kind of lukewarm? Are you saying it's big? Oil looked great last week.
I know. Completely
and now
changed.
Not so great.
But if you notice, and I wrote this, anytime oil pokes its head up to rally, it gets smacked down. And I don't know if it's because it's an election year or what it is, but it gets smacked down every time it tries to rally.
Huh. Okay. I'm just noticing. Oh, I've got 3M up here because I had some calls and I almost sold them and I didn't. And now kind of our little sell-off, we're getting a little hinky here in the market. It feels like if we're going to recover some of that rally we had last week. Anyway, that's a different subject. I feel like this is some kind of weird selling. Like here, let's just take a look at vols here. All right. So we just had our earnings April 29th. We won't see earnings till July. So volatility is just picking up from the earnings. But I mean, you got to be realistic here. You've got a level that where we are currently was the low for the last year. So to me, it's still pretty low. I think an oil stock, right now in the teens. It still looks like a pretty decent volatility buy. Gotta say. Now, another thing you could do is a little trick I use is this. This is live vol, by the way, for those of you who do not have it. So what I do is I use the 90-day volatility as, so as a floor trader, I had all these ideas. Anyway, so there's a couple of numbers I like is 360-day, which is like the average vol for the year of the underlying, and then 90-day vol. So right now, if we look at a couple of numbers, just for giggles, what do we have? So right now, the average volatility for Chevron for the last year, so that just means every day, close to close for the last year for Chevron, it has moved over 1% per day. 22 volatility is more like 1.5% per day, roughly. What is that? At 16 to a 32. So about 1.5. So
yeah, about 1.5.
Right?
Yeah.
So now recently, though, it's been in a bit of a doldrum. So 90-day vol, very low here. All we've had is these kind of like steep, trending markets, but you're still getting like very, very steep moves. So like, 2-week moves are pretty substantial still. So with 1 year vol at a 22, like you just buy some options.
Yeah.
Basically. And Alicia, you're kind of like a little on the fence, sort of like,
She
okay,
threw out a She threw out a strangle idea that I kind of like. She said, I think this is a good stock to strangle. So strangle meaning we buy totally a call and we buy a put.
I totally agree. So in the SPX,
yeah,
you strangled. Okay. All right. Now the question is what do we lean? Do we fade this sell off in oil and lean long, or do we lean short? So I'd say it looks like you have like about 2 week, the moves are like 2 weeks or so. I'd just say that every time it looks like bad, it's only bad for a couple of days and comes right back again. Although this was a pretty long sell.
And the premiums just seem really inexpensive to me, especially downside.
Yeah.
I'm looking at the June 28th for the end of the month. Are you looking at July? We can look at July. July is cheap. I mean
July. We could do a weekly at 16. The 165s are $1.13. When was the last time this thing was 165? Not very long ago.
Not very long ago.
I would almost opt for something closer to the money, though. I think you can get away with the 60-55 strangle here. I don't know. I'm still like a little bullish energy. I'm not believing the.
Well, the problem is only June has the 2.5 strikes, which is what I want to trade.
Well, I would buy more duration with the vol solo.
Yeah. All right. Well, then I would say we do. I mean, the 155, 165 strangle in July is what? $4.25.
Yeah, $4.15, something like that. $4.20, $4.30.
$4.25. That, I mean, it's down $3.50 today.
And it's about delta even, 31 over 33. So the calls have a little more delta. I would just go easy and just do the strangle, just straight.
Yeah,
I think the market is too. The market for the stock is a little too ambivalent right now.
Yeah.
So we have a June 03. Okay, and now we have. So we buy to open one. Here we go. Okay, here you go, people. Okay, now here's the thing with a trade like this: you don't have to freak out and buy it. Okay, don't freak out. All right, you'll put in a bid. I'll show you what to do here in a minute. Chill out. Okay, now the trade has a little bit of a delta. So if we go 155 put, 165 call.
Got a tiny, tiny, tiny delta.
Yeah, call for, what do we say, 425? So
Yeah.
here's the thing, okay?
I mean, actually, Andrew, this thing is pretty darn delta neutral. I only have
Yeah,
a one
it's
delta.
pretty
I only
close.
have a one delta.
So right now, if you put in a bid of $4 and 225, let's say, right? And the stock keeps going down, this put delta eventually is going to keep up and your strangle will never fill. So if you put in a bid, something on the bid, and we get a quick rally, it will eventually fill. So this is one of those things where filling right now on the downside, I think might be a little harder if we keep selling off. Now, there's no guarantee that we keep selling off, but I'm just saying here that that's not a bad, a bad way to go. Put the spread in mid-market and see if it fills. So that's what I'm going to do basically. Here, let me give this to Christian first. CVX. Oh, it's not CVS, it's CVX. Sorry. So this is the idea. Here, let me give this to Christian. All right, so buy to open. And again, it's a Monday, so weekend effect is coming out. You might be able to buy this a little bit less expensively. And why can't I? There we go. So I'm just going to float a bid in here for it. And we'll send this out to Christian. Here we go. Let's. All right. So, all right. So this is what we got. So here's our trade. So I'm going to float a bid in here for it. Now the market is having some exchange issues, I think. So, because we have a couple of stocks like BRK. Berkshire Hathaway is down. Oh, it's only down 1%.
Yeah, we'll talk about.
Yeah, they opened back up.
We'll talk about it here in a second. Yeah, but
there's a little bit of exchange issue there.
That was all an exchange issue. It was not real.
Well, that's what I figured. But anyway, what are we? CVX.
So there you have our.
Yeah, well, I think when vol is pretty low, you've got a relatively high realized vol. You just, you want to just buy some strangles. Alicia is not really, she's seeing like things are this way, that way. So I wouldn't take a huge delta one way or the other, personally.
I agree.
But so I'm just going to put my strangle bid in and see what happens.
There you have it, folks. Andrew, any updates on? I mean,
I sold my Walmart calls at 205.
You were long the July. Week. So just put things. You bought the July 65 calls. I think we paid what? I bought some myself. I got to go back and look at my.
I think we paid 154. I think.
Yeah, and they went over $2. So we took a bunch off.
I had an offer in GTC and it just filled. I wasn't even thinking about it too much anymore. Because I wanted some delta here for us.
Yeah.
Hold on. Let me see here. So here it was. I paid 152. If Walmart broke 63, buy a put to hedge. I just put a 205 offer out and it filled. And would I roll up, take some money and roll up? You could, but as of right now, I'm not really doing anything. Now you guys traded in May.
Yeah, the NVIDIA trade looks pretty darn good. That was last week. It was the 1150, 1200, 1250. That one, the 8-ish range. Now that one's going to take a little while to work because it's relatively tight given NVIDIA's $1,100. But I do like the way that one sets up. I believe it's already up nicely. We had a couple of traders do a similar trade but shorter duration, and they got in and out like that.
Yeah, I wasn't here for this one, so I didn't fill it or put it on. But that was the trade from last week.
Yeah.
And then the trade from this week. Now, where is this page? Okay. You're like, Andrew, where's this page? So we do all these trades. If I fill it, I tell you. If I don't fill, I just go on to the next thing. Actually, I do have some June 7 calls for 13 cents I still got laying around on this one. And you go to here, you go to homepage, you go to free newsletter, Pit Report.
Yeah. So optionpit.com.
Yeah.
And then you just click on Pit Report.
All right. And all the videos, ticker highlight. Look at all these handsome, beautiful people here, you know. And the track record is here. Okay. So I update this every week when we have a new trade pop up. You can see everything we've done. And I tell you where I close it. Now, if you like what we're doing and you're like, why don't you send us alerts to close? That's a paying service. Right. So this is an example of, hey, I put the trades on, and then we take them off, and then we get what we get, which is what trading is like. But we're not going to alert you to exit a free service. But we do put the trades on during class. So right now, I got to do it before my class is over.
Yes. And if you're interested in joining us, please give my team a call, 888-872-3301. If you're watching this on YouTube after the fact, like, subscribe. If you have a stock request or anything like that, leave it in the comments if you want us to break down a company you're interested in. So with that, Andrew, I hope everybody has a great trading week and a great trading day. So for Andrew T. Giovinazzi, the Viking of Volatility, the Vicar of the VIX, and Alicia J. Leslie, Queen of the Candles, I'm Mark Sebastian. I am your only option. Have a good one.